Okay, so real quick, I'm going to show you how I use my latest application, and quite frankly, how powerful it is. It's called PERS, which stands for, it's an acronym, which is Prop Evaluation Risk Surface. So if you're wondering where the name came from or what it stands for, that's what it is. Real simple. What is it going to take you not just to pass a prop evaluation? What is it going to take for you to become a consistently profitable trader? So this, I've built other applications before, but this one here really hits home as to, it's got three main functions. Can we pass? Which is, you'll see my mouse here where the checkbox is, it says positive, and I'll explain that in a moment. Ruin trade count. Okay, you see where my mouse is right up here. It says ruin trade count. And then, of course, target trade count. And they're pretty self-explanatory. A, am I able to pass? And if I am, what or how many contracts can I trade based on my winning percentage? Okay, so everyone has their own personal level of skill, I guess, for lack of a better word. And you have to answer that yourself. I don't know if you're a new trader into the game, if you've been trading for 2 years, 5 years, I don't know. We all are at our own independent levels, but you got to be honest with yourself. And then, of course, we can, in anything in yellow, I always do this on my applications, it's a user-defined field, meaning you change it, you manipulate it, you enter your values, and I'll walk you through that real quick. So that's the ruin trade count. How many trades can I take before I blow an account? And then, of course, once again, back to a target trade count, which is how many trades can I have to take in order to reach a target. Now, that target could be you earning enough money to pass the evaluation level, depending on what size account you've purchased. Or it could be just even on a go-forward basis. Let's assume you've passed the evaluation. You are a funded trader now, and maybe you might have even got a couple payouts. But you want to know how many trades roughly, if I stay consistent, and that's the key to this game, how many trades do I have to trade, or take rather, based on my winning percentage, based on the number of contracts that I'm comfortable trading. How many trades do I have to take to reach that profit target? And again, I said it's a user-defined application, so let me just go ahead. And when I record these videos or web tutorials, I never have a script. I speak to you as if you were just sitting right beside me, and I'm explaining how this tool or my other tools work. So just keep that in mind. There's no script here. So here we have, and this we have a $3,000 profit target, as you can see right there. And you can click on the drop down if you want to change it to any dollar amount, but I'm going to leave it at 3,000. Whoops. Leave it at 3,000. And the max drawdown, once again, if you click on the yellow cell, those are the user-defined fields. And the max drawdown on a take profit trader, 50K account, is 2,000. So you cannot lose more than 2,000. And the goal is to make 3,000. Okay, it looks like I left it at 3,250. There we go. So the goal is to make 3,000 without losing $2,000 within that 1 month evaluation phase. So if you pay money to an evaluation, or I'm sorry, to a prop firm, you have to prove to them that you know what you're trading. It's a cash grab. Okay, let's just call it what it is. But bottom line is you have to pass the evaluation. Those are the rules. And so you've got to make 3,000 without losing $2,000 on a cumulative total within that 30-day window. Most people who are listening to this know that, so I just quick refresher for those who are kind of new to the space. What's also user-defined is your stop loss. So right now I've got it at a 40-point stop loss. I've got an R multiple of, let me make it nice and simple. I'll just change it down to 2. Okay, so a stop loss would be $80. It's already calculated for you. And your profit target is right here, $160. And what we're trading, by the way, this was built just for the MNQ. Now I can change this and make it for other futures contracts, but for now, because the MNQ is the go-to contract that people prefer to trade, traders prefer to trade because of the liquidity, because of the volatility, you get the price swings, which we're all after. I'm just going to show you the power of this application, and I'm going to use MNQ as the contract. It's the only one right now. Now I can change that later, but for now, we're just going to run with the MNQ contract. So what that means is every one contract that you purchase, each point up or down, depending on which, okay, let's assume we're in a long position, meaning we want the market to go higher. We think the market is going to go up. So we buy one contract, that's 2 points. Okay, again, 99% of the people who listen to this are going to know that, so I apologize for regurgitating old information or stale information. Everybody knows this, but there are a few people who may be listening that don't realize that the MNQ contract is $2 a point. So if it goes up 10 points, you'd make 20. If it goes down 10 points, you'd lose 20. So stop loss is $160. So our profit target, stop loss is $80. That's a 40-point stop. Remember, $2 per point, $80 if we get stopped out. And by choosing your R multiple, what you're saying is, if I'm willing to risk 40 points, I want a 2R multiple. What that means is I'm trying to make 2 times what I'm willing to risk. If I'm willing to risk 40 points or $80, I'm looking to make at least 80 points or $160. Okay? So, real quick, $3,000 profit target, $2,000 max stop loss or max drawdown, 2R multiple, 40-point stop, and that would mean by default 80 points is our profit target, which is equal to $160. So what does this application tell you? Well, it tells you right here, 91.1% of people will fail this, will fail their evaluation, or again, let's pretend that you've passed the evaluation and you've been funded. Okay, so you did something right. Congratulations. Most people don't. I believe the number is closer to 95% of the people who try to take an evaluation don't even pass the evaluation. Forget covering the buffer. We're not even going to talk about that here. The reality is most will never even get a payout, and that's upsetting, but it is true, and my application supports that. But I'm going to support it empirically. So how does it work? Up here is your win-loss ratio. Are you a 50% winning trader? Right there. Are you 55, 60? What does that mean? You take 100 trades, and on 60 of of the 100, you pass. You hit your profit target, which would be right here, 80 points. And 40% then, by default, when you say, if I asked a trader, what is your winning percentage? And the trader said, I'm a 60% winning trader, roughly. Okay, fine, we put in 60%. That means you're also telling me that 40 of your 100 trades over a sample size, a sample of trades, are going to be losses where you put on the trade and you get stopped out. Okay, so that's still a pretty good trader, trust me. Again, people who are listening to this probably already know 60% is very, very, very livable, survivable, profitable. You can make money if that is your real win rate. Then what happens is sometimes our emotions take over and we lose focus and our discipline and whatnot. But if you are a legitimate 60% winning trader, you can make very good money as a professional trader. So now the question becomes, how many contracts are you trading? I've got it scaled here from 1 to 10, and going back to my win rate, I've got it beginning at 40%. There are some traders that are right only 30% of the trades, and they still make money. How do they do that? It's the R multiple. So they're not right very often, but when they are, they have a large R multiple. So I'm not going to get into that right now, but what I am going to show you is that we can change these values. So for example, let's start with the win rate. I've got it at 40%. It scales all the way up to 80%. Very few traders will ever be right on 80% of their trades. Can it happen? Yes. Is it sustainable over a very, very long period of time? 1 to 2 years? Probably not. The best traders that I know that are legitimate, like they can back it up with statistics, they are very disciplined with their stop losses, they are just the best of the best. They're probably right around here. And let me just show you with my mouse. They're probably between here and here. Maybe there's a time where they'll get up to 75% win-loss ratio. Again, you're talking, if I were to give a grade, this would be a 10 trader. Okay, anything above 75 is a 10. He's a 10 out of 10 trader. This would probably be like an 8.5. This might be a 9. This would be an 8. Again, if you can trade and be right on 65, 70, or 75% of your trades or above, you're in rare territory. That's just the reality of the game. And anyone who knows trading knows that that's a pretty accurate assessment. But there are traders who are right, maybe 40, maybe even 35, and they make money. But that's because they will take a lot of losses and they're looking for those big, big wins. And in fact, that is kind of a model that a lot of prop traders employ, where they will put on a big position. They're not right very often, but if they can catch a big winning trade, they can pass the evaluation relatively quickly. if they do that, and I've heard a number of really, really good traders say it's not a bad thing, because the cost to buy an evaluation is probably about $40. Sorry, what am I saying? It's probably about $80 to $120, depending on what prop firm you go with. So for them to lose 100, let's just say an average of $100 per account, and if they buy 4 or 5 accounts, all they need is 2 or 3 big wins on 1 or 2 of those accounts, and they've passed, maybe 2 of the 5 accounts, or maybe 4 out of 10 or whatever. So they'll be more aggressive in the evaluation phase because you're not making any money during that phase, and then the good traders will take their foot off the gas and be a little more prudent once the account becomes live. But you can change your starting win rate right here. So there's a cell here, starting win rate. Remember I said if it's in yellow you can manipulate. So let's go ahead and bring it down to 35. Now we have this scale starts from 35 all the way up to 75. And what we've just done, if you look here, probability of loss, it reduces because now I've included in this section a range from 35 right here all the way up to 75. I can reduce it even more. So let's just do that one more time. Now we're starting at 25, and it's up to the maximum of 65. Now 97.78% of traders will fail. And you can see things are changing in real time, or as I manipulate the user-defined variables, it actually adjusts the chart as well. So that's extremely low. So I'm going to go ahead and put it back to the 40, which is I'm comfortable with. Maybe I'll do 35. Okay, whoops, I went to 40. Let's go to 35. What it's telling you is 94.44% of traders are going to fail. Where am I coming up with that number? Well, it's mathematics. I can actually show you the formula. To do that, let me just go here, and I'm just going to give you a quick peek at the formula. But there it is right here. So this table is designed off of this formula. Okay, so I'm not going to give away the secret sauce, but that's where the formula is. And what it says is that if you are telling this application I'm a 60% winner, then it calculates not just one winning trade. It's in fact, I wrote it here because people are going to say, well, what are you talking about? I'm a 55, it says right here, a 55% winning trader, and you're not going to pass, right? So that's a great segue. The cells have to be white. I'm going to repeat that again. The cells need to be white in order for you to pass. So if you told me you're a 60% winning trader, consistently with a consistent stop and a consistent profit target, and your stop loss is 40 points, you have a 2R multiple, and your goal is to make $3,000 without losing $2,000, you're going to fail. And this doesn't play favorites. This isn't opinion based. This is all 100% empirical, meaning it's based on mathematical formulas. Now, I did say here, it says right here, and I'm going to read it. Trading is the only profession where you can be right 3 times out of 10 and still build wealth. It's true. Or right 6 times out of 10 and still go broke. The difference isn't talent, it's structure. What we're talking about here with this application that I designed is structure. PERS doesn't measure your last trade. It measures whether your approach survives repetition. Think of it like a casino. The house doesn't win every hand. It doesn't need to. It wins because the math compounds over thousands of decisions. PERS tells you whether you're the house or the gambler. What that means is you may actually pass an evaluation with a 45% winning percentage as a trader. So out of 100 trades, you're right on 450, but you're also telling me that you're wrong on 5. If you say I'm right, let's just use 50-50. If you tell me you're right on half your trades, you're just basically telling me you're wrong on half, that you got stopped out on half of your trades. How can you make money? How can you pass according to this? Well, you might have 6 winners in a row, and you would pass. But if you keep taking those trades and still have the same stop loss and still have the same profit target and still have the same 2R multiple and still use whatever approach, this application does not tell you when to get in, what signal to look for. It says when you've taken a trade, and when you take it, you obviously have some sort of edge. Maybe it's moving averages, maybe it's exhaustion, maybe it's smart money concepts. I don't know. Whatever your reasoning, your logic to take the trade, you're telling me that you're a 50-50 winning trader. If you consistently do that, this application is telling you consistently, eventually you will lose. Now you might have a few wins, and this is speaking to the gambling component, and I don't like to use that word in trading, but when I hear traders passing in 1 or 2 days, is it possible? Sure, they went crazy. They went, balls to the wall. And the bottom line is that sustainable? This tool says empirically it's not. If you take enough trades using whatever system and you tell me that you're a 50% or a 55 or even a 60% winning trader with these metrics, you are not going to pass in the long run. You may pass an evaluation, but you'll probably blow your account over a number of trades. And in fact, I know, again, statistically that happens where traders will get through the evaluation. They may even cover off the buffer. They may even get a first 1 or 2 payouts. And then I hear it. I see it all the time. I watch traders on YouTube. They blow their accounts. They literally blow their accounts because old habits die hard. And over a large enough sample size of trades, you might have got through the evaluation. You might have got through the buffer. I can tell you the last 3 or 4 weeks in the market, the moves have been absolutely insane. Like I'm kind of historic, especially in the MNQ. And this is all due to the Middle East crisis that's happening over in Iran. And the market has just been incredibly volatile. And quite frankly, it's been a slingshot to the upside for at least 3 weeks, if not 4. And there were people making a ton of money. But don't ever confuse a bull market with brains. Don't ever confuse a massive run with skill, because that's not going to last forever. And what will happen is the market will revert back to its normal types of regular price ranges for the day and for the week and for the month. And now your skills are going to have to come to the fore. And if you don't have those skills, you might have got lucky. And again, this application proves it. So let's take a look here. I wanted to show you that if it's not in white, you failed. So you could be a 65% winning trader. Could you pass? Yes, but you're only allowed to trade 1 contract. If you start trading 2 micros, you will blow your account eventually. There it is right there. And that's a 65% winning trader. That's a 65% winning trader. And all they're trading is, forget the mini. This is a micro contract we're talking about. If you trade 2 micro contracts over a long enough time frame, you'll blow the account. Now, how can we fix that? How can we make that better? Say I am a 65% winning trader. How could that become more favorable? Or how could we make a 60 or even a 55% winning trader a passing trader? There's only one way to do it. You have to increase the multiple like this. Okay? You can increase your skill set and become a better trader, but you still can only trade 1 contract. You can still only trade 1 micro. You'd have to be a 75% winning trader, and only you can answer that. You can lie to yourself, or you can say, I'm not a 75% winning trader. Chances are, if you're good, you're in these 3 here. 60 to 65 to 70. And look at this. If you try to trade 2 contracts over a sustained period of time, you will blow the account. Now, we can change that narrative by increasing your R multiple. So if you're willing to risk 40 points, what we can do is say, how about if we went for a 3R multiple? Well, now see, it starts to get better. What if we went for a 4R multiple? Let's go ahead and go for a 4R multiple. There we go. Now a 60% trader, yep, he would still pass. Now we're getting closer to the 55% winning trader. But again, it's only allowing you to trade 1 micro. If you traded 5 micros and you are a 70% winning trader, you're doomed. If you're an 70% winning trader, 75% winning trader, the most contracts that you can trade, if you're a 75% winning trader, which is rare territory, is 2. Otherwise, over time, you will blow the account. Can you pass? I'm repeating myself, but the answer is yes, you can. But now you're gambling. If you are a consistent trader, you have to be a 70 to 75% winning trader with these R multiples and with this stop loss in order to pass. So let's go ahead and click it more. Let's go ahead and increase the R multiple. Let's go up to 5. Okay. By going to a 5R multiple, the 55% winning trader is allowed to trade 1 contract. I'll repeat that. The 55% winning trader, which is not bad at all, is only allowed to trade 1 micro. That's it. So I just wanted to, now, before I move on, how often do you get a 5R multiple? How often? If I'm willing to risk $80, how often do I get that $400 win? How often do I get a 5R multiple? Points, I need 200 points. How often do you get a 200-point move? Recently, they've been all over the place. But how often can you consistently say, look, I'm willing to risk 40 points in order to make 200 points? That's your 5R multiple. And if I'm that good and I'm that disciplined to wait for a 200-point rally in my favor, I need to be at least a 55% winning trader, and I can only trade one micro contract. Anything beyond that, and I will eventually, over a large enough sample size, I will fail. I see guys on social media, in particular YouTube, they're trading 8 and 10, 30 micros. I'm like, it's just a matter of time. They're doomed. Like, look, you get up there, that you're basically gambling. Like, let's just call a spade a spade. You're gambling. And you might be able to get a 10-point move in your favor. Okay, you got a 10-point move in your favor. Remember, 10 points is equal to $20, and you're trading 10 contracts. There's $200 real quick. Did you make it? Of course. But that could just as easily have moved the other way. Right? I mean, that's just the reality. So swinging for the fences is not the way to go. Multi-propping is probably the way to go, or copy trading is the way to go. And if you're good enough, you can multi-prop. So copy trading, of course, is when you trade, when you click on buy or sell, but you're not doing it on a single account. You're doing it on 3, 5, 10 accounts. So that's a whole nother conversation. Real quick, I'm going to wrap this up. Ruin trade count. Okay, ruin trade count. So let's go ahead and improve a couple of things here. I'm going to just change the starting win rate from 35. By the way, you can change the number of starting contracts. You could say 2. Watch here. So what we're going to do is go to my contracts, because there's a couple of guys out there that I know they like to swing hard and swing for the fences and trade hard. So let's go ahead and say we'll start it off at 2 contracts, and we'll put it at a 3 increment. So the lowest amount of contracts that you could trade according to the table now is 2. And we jump by 3 contracts at each increment, all the way up to 29. We could go to, let's do 3. 3 and 3. So there we go, 3, 6, 9, all the way up to 30 contracts. You can do it. Lord knows these prop firms allow you to hang yourself and trade up to 30, 40 micro contracts at a time. Probability of loss, 100%. So let's just go ahead and put this back to 1. Those are the starting number of contracts and then the increments. And I'm going to change this from 35, and we're going to start the win rate at 40. Okay, so we've got a range now from 40 all the way up to 80. Okay, so what I wanted to show you is ruin trade count. What does that mean? Well, how many trades can I take before you blow the account? That's what it means. So we just click turn off this, and we go to ruin trade count. So if you notice, if I turn this off, the same cells that are white will be white with this off. So this is, can I pass? They're all the same, white. And will I blow my account? How many trades? Well, you're safe. But take a look at this. If you are a 50% winning trader, so 100 trades, 50 are winners, 50 are losers, and you're trading 1 micro, in 25 trades, you're done. If you traded 2 micros, 12 trades, and your money's gone. Now, this is an average over time. Remember, you could have 4 losses, and then all of a sudden you have 7 wins and whatnot. But it's saying over time, it's just a matter of time before you blow. You can have 12 trades trading 2 micro contracts if you're a 50% winning trader, and then your money's gone. The more contracts you trade, as you can see, the less number of trades. If you wanted to go in with 8 contracts and you're a 50% winning trader, 3 to 4 trades over a large enough sample size. You will average 3 to 4 trades and you will blow your account. Okay. And let's just go ahead and uncheck this. By the way, you can manipulate the chart so you can see it better in the 3D graph. So let's go ahead and rotate this around. So we'll just turn it around so you can see. Apologies, that's an alert set. Okay, so let me just jump back. You just got to see my platform. So let's go ahead and rotate this a few more times and bring it around. As you can see, here it says in dark blue, or I'm sorry, cyan, I guess is how you pronounce it. Number of contracts, 1 through 10. The more contracts you trade, the faster you're going to ruin your account. If you are, and now let's just address the scales here. Expected drawdown to reach the target. How many trades can I take before I would hit my target? In this case, you'll blow it unless you are a 70% trader trading 1 and maximum 2 contracts, or 75 or 80 above. But again, I want to show you that you can have different ways to view the chart so you can get an idea. And this is, once again, 88.89% chance says you are going to fail over time if you are trading too large of a size. So if you're a good trader, 70%, All you need to do is trade 1 or 2 micros. In fact, anything more, and you will eventually blow the account. So we turn off the ruin trade count and we turn on the target trade count. Let's do that. How many trades do I have to take in order to hit my $3,000 profit objective? That's a user-defined field. So you could put in 1,500, you could put in 2,000, whatever you want to put in. But how many trades would I have to take? So let's just do that, just to show you the table change. So forget 3,000. What if I just wanted to make 1,000? Look at that. I could trade 3 or 4 trades. Again, that doesn't mean 4 trades and you've made the money, or 4 trades and you've lost or blown the account. What it means is, over a large enough sample size, on average, 3 trades to make $1,000, but that's assuming you're trading 1 micro and you're a 65% winning trader. Okay, so now if I put it back to the objective of 3,000, you got to make more trades. Okay, and that is, once again, somebody who has a 5R multiple. Last thing I'm going to show you. If we reduce the 5R multiple, that's a big multiple. Most traders are happy with 1.6 to 2. That's a fact. Most traders, if they're risking 40 points, they're happy with a 2-time or a 2R multiple, which is 80 points, which is a $160 payoff. So let's bring it back down to earth. I'll bring it down to maybe 3. Okay, you see the number of trades required? It goes up because you're not getting such a return. And keep your eye on this number. I'm risking $80 to make $256. Let's put it to 3. I'm risking $80 to make $240. Well, I got to take more trades now because I don't have as high an R multiple. So I hope you enjoyed this tutorial. As always, it's way longer than I anticipated, but it's eye-opening. At the very least, you got to know what you're up against. There are, like I said at the beginning of this tutorial, 95% of traders never even get through the evaluation. Forget even getting paid. 95% of the traders will fail their evaluation. That means only 5% of traders are actually getting through the evaluation, and I don't know what the exact percentage is that is actually getting a payout. So all these social media influencers that you are seeing, take everything with a grain of salt. Thanks for watching. I hope you enjoy this.